Welcome everyone, Simon here from the Whales of Wall Street, a quant video for you guys today. In fact, actually we're going to tie this in with a couple of the comments that have come through on various videos that I've done recently as to Quant's newish position really in relation to the kind of downward aspect of CBDC topic currently here in the UK, central bank digital currency, albeit guys, many countries around the world are still progressing, if not live already, with their CBDC projects. Of course, there's the utilization now of stablecoins becoming more of a fluent topic, more of a topic that relates to stablecoins actually being integrated with our financial system. But where does Quant fit with all of that alongside these two particular topics, and why this is important for the Quant price moving forward, of course, as well as a project in general, because Quant is going nowhere. We'll explain in a bit more detail as we go through. Don't forget, guys, to check out the other videos on the channel when you get a moment. Some, of course, are a bit old, but there are some out there where we've talked about these kind of topics for a long time, and we're getting to that really exciting point in 2025 where it's all finally coming together. We're going to see some really interesting action, not just this year, but for the next 4 or 5 years in the financial world, as well as this exciting integration, maybe some concerns as well, of course, as blockchain and AI really take hold of our financial systems, as well as many other sectors around the world. So let's go straight into this topic. First and foremost, just a very quick recap, guys, for those that are new to the channel or new to crypto, or indeed like finance in general. There are a number of things that have been going on in the background for many years. Some have been concepts, some have been things that just take, in general, a long time to pass through as bills and parliamentary law, etc., as well as coordinating an entire new financial infrastructure moving forward on a global scale. So not just the UK, there are so many variables, so many barriers, so many things that still need to be defined. But as we did, I think the video I did, which is still on the channel, if you are coming back as a viewer, where I did a big video on the RTGS system coming live this year. That was about 2 or so years ago now. So as I said earlier, it's really interesting to get to that point, fast forwarding almost how quick life has gone, to see where we are with all this. So first and foremost, ISO 222, this was a topic actually a couple of years ago. A lot of people got really excited about this. There are some legacy projects, or I like to call them legacy projects, as well as some newer ones that have come into fruition recently, that are what we call compliant to ISO 222. In general, guys, this, alongside the new RTGS system and remittance system, which we'll talk about briefly in a second as well, because it all relates to Quant and the overall sphere of these legacy projects. It's a new financial messaging service, which ultimately, in basic layman terms, means faster payments, smarter payments, and ultimately more secure payments. Now, the words secure and smarter are very easy to put down in writing, but there's so many things that conclude as maybe a potential concern. We'll talk about those in more detail in a second. But this all ties in really with the overall concept of a single, not fractionalized or fractions into other countries, their own frameworks, but a single global payment language where the likes of, again, another topic we'll pull in a second, central bank digital currencies and stablecoins can now essentially seamlessly follow through banking systems that we know or have known for the last many decades. So we think of like SWIFT is a prime example, which will be scaling up massively in the new ecosystem, the new frameworks. You got CHAPS and BACS here in the UK. We've got IBANs. In other countries, I'm sure there are many other different terminologies, which I'm not massively familiar with to an extent. But the loop around with all of this is that any stablecoin or CBDC has to be ISO 222 compliant. Conveniently, these standardizations have been very much integrated over the last year or so in pretty much all the banks here in the UK, albeit that most of them are also based abroad, but globally have been integrating. Okay, and this is also integrating with the new RTGS system. Here in particular in the UK, this actually goes live in November, as we not necessarily predicted as such, because the information was given to us or myself ahead of time, or at least I researched it ahead of time 2 or 3 years ago, that this was in the plan. November 2025 is where pretty much the UK in general, I'm not sure about other countries if they have to define by this period of time as well or not, but by November 2025 this new RTGS system goes live. Now, from the research I did in that previous video, I think I cited something around 720 billion pounds worth of transactions go through the RTGS system every day, just for the UK. That's incredible. Imagine multiplying that number significantly for the protocols and requirements on a global scale. Absolutely phenomenal. So the RTGS is essentially used for the large value aspect, real-time payments between banks. Not so much, too much of our individual transactions. They tend to be taken care of in an individual, more concise basis. But the upgrade to the system essentially means that we're ready for digital assets. And that's not just CBDCs and stablecoins, guys. This is the ISO 222 compliance. So this is very heavily regulated around the likes of Quant. We've talked about XRP in the past. I think Hedera is compliant, I'm pretty sure. IOTA, I think, is, but maybe not officially. I need to double, triple check the standard levels of those. But it opens up those aspects, but also opens up the concept of digital assets in general. So we're talking about like the NFT concept, real world assets and things like this. Imagine not just the transactions that we do with each other on a payment perspective, but also things where we're accommodating things, maybe perhaps the selling and buying of gold in a digital format, or diamonds that we've mentioned in previous videos, or another physical kind of another physical kind of product or material item, whether it be watches, houses, real estate, as an example. We've talked about those concepts in the past already as well. So we've got the global messaging standard for payments coming in. We've also got the aspects of the new RTGS system, and we've also got the elements of these CBDCs and stablecoins coming into fruition as well. So we're kind of asking these questions. Well, we're seeing across the board here in the UK, I don't know if it's similar in other countries, but over the last 4 or 5 years, and this is systematic, guys, by the way, I haven't just decided this over the last year or so. This has been part of the plan to become more digitalized, arguably more observant, and potentially, on a critical perspective, is maybe venturing into the privacy aspects of our finances, the openness of that, the ability of blockchain to be fairly transparent in certain instances, or the ability to at least access accounts even without permission. With some of these strange bills and laws that are going through, for example, we've got the debt bill going through at the moment, or certain aspects of that will allow the organizations like the HMRC, tax implications and things like that, to access bank accounts or have information of bank accounts without your permission, as part of this new regime and system. Potentially, it's not, I don't think, confirmed yet, but it's certainly a theory. Potentially, the theory is that they could actually access your accounts anytime and take money from you if it's owed to them. Of course, they're not just willy-nilly take money, of course. But moving back to that point about ISO compliance, again, we'll get back to Quant in a second. It's just important to understand the terminologies of these areas and then understanding where Quant fits in. But this new metadata that's coming in with the ISO compliance is very much heavily regulated and standardized within the infrastructure and the interoperability aspects that CBDC and stablecoins will require. So that's kind of how they all align with each other. But many people may be sitting there asking, well, what's really the point in the CBDC aspect? And this, again, will come back into more fruition as to, why Quant will be so significant in here. So first and foremost, we'll explain the stablecoin. So stablecoin is a kind of cryptocurrency. It's pegged to a stable asset in most instances of fiat currency. So the usual types of US dollar, where we've seen, for example, the Ripple stablecoin, which is, what do they call it? RLUSD, I think it is. We've seen multiple other ones, USDC, which is made by Circle. We've seen USDT, loads of different variations. There's now more and more other fiat options out there, like in the euro concepts, etc. So a stablecoin, and these are the differences really between a CBDC. A stablecoin is essentially A private company or a bank, i.e. PayPal, we've mentioned Circle as an example. We know like JP Morgan are talking about stablecoins, etc. A CBDC is a central bank digital currency, i.e. it's operated and essentially owned really, or certainly monitored in that aspect and processed by the central bank. In our instances in the UK, the Bank of England. I'm fairly sure it's called maybe Fedwire in the US. Someone could correct me in the comments. And I'm sure many other countries have their own various areas of information regarding who their central banks are or their remittance systems. Now, stablecoins will be backed or by assets that are held as by the private issuer or the fiat reserves we just mentioned. The CBDCs are banked by central bank or backed by central bank. Now, if you, I don't know, maybe use like ChatGPT or something or research on Google or whatever, it's actually really fascinating when you look at how money is created. I always call it an illusion. I think money is an illusion. It's an unfortunate necessity that we need in the world. It creates a lot of problems as well as potential opportunities to better ourselves in some ways. But I believe it's an illusion. That's just my thoughts and opinions on it. And I especially believe it's an illusion as to knowing how the monetary system works, how they borrow money, how they print money, how they even create bonds and gilt bonds and things like this out of thin air to orchestrate the ability to then print the money if we need it. Of course, that then affects things like interest rates, inflation rates, etc., etc. But ultimately, the whole system entirely is an absolute manipulation, massive machine. Okay, so you can imagine if stablecoins are, to an extent, a better format, in my opinion, versus a CBDC. CBDCs being centrally banked, orchestrated, does open the question as to, well, are we not just digitalizing the nonsense even further? The regulation aspect obviously varies in both at the moment. However, more so in the CBDC camp, you've got the fully government regulated and controlled mechanism of it as well. So I've got on the screen here the aspects of banks closing, and this is a really important topic area to look at in a moment's time. But before we go into that particular topic, because it really does relate heavily to there and why us as general public are either being forced to use these things or have to be using these things, and then ultimately how that then loops back to projects like Quant being needed for these infrastructural progressions, and ultimately not necessarily directly us using Quant as such, but using at least the systems that will be powered or supplied with that kind of technology or platforms that the banks that we use will be utilizing. So the control elements are questionable on stablecoins and CBDCs, as is the trust model. And of course, the goal ultimately for stablecoins is a more fast, stable and reliable payment system. The CBDCs aspect is essentially the general overall public having access to digital central bank money. Now, what do we gain from this? Well, they state, I say they, kind of the general consensus of stablecoins, if you look through various research topics, and like some of the articles that I've got here and in some of the discussion papers, we have faster and cheaper payments. So here in the UK, I'm not sure if it's similar to other countries, there's generally a 3-day bank transfer situation going on. That doesn't mean that if I send you money, for example, to someone else in the UK, it tends to show in their account fairly immediately. However, the actual processing aspect in the back of that end can take 3 to 7 working days, maybe even longer some instances, depending on the checks, the processing, the different interoperabilities of banks and things like that. So there's a emphasis that we can send money more instantly and even internationally on that aspect as well. At the moment, my brother and I, for example, he's in Chicago. If we need to send money to each other for like presents or whatever, we use PayPal because it's quick and easy, it's immediate. Whereas going through banks, we have to dither around with the processing aspect, the time it takes, and in terms of that processing aspect, even in the back end, not necessarily affecting us massively. There's lots of costs and exchange rates and things like that to consider as well. So ultimately with stablecoins, you also have that element of real lower fees. So in an instance where you're using IOTA example, albeit not necessarily stablecoin, but it's the principle of utilizing blockchain technology to have that quicker transaction speed, the ability of more transactions per second, but also the opportunity to have very low fees, if not any at all, compared to the potential remittance fees that we have added in. And usually those costs and fees, by the way, guys, are also already equated into our purchasing dilemmas. So a product, when you buy it on Amazon, for example, or wherever you buy it from, always has various margins in it, so that the supplier, the warehouse, the manufacturer have their own margins taken out of that, and they give you the end cost, which ultimately includes things like taxes and fees and things like that. So when you think you're getting good value for money, if you actually break it down, the actual cost of the product isn't actually that much, but it's all the overheads and all the remittances, the fees, the payments on top of that, which they don't want to pay for, which is understandable. I mean, it's no different to any other concept. 24/7 access to money. So we talk about the no banking hours. This is where we talk about straight away into the bank closures. This is where it emphasizes people who have the utilization of internet banking, the ability to be a bit more savvy of how they use their banks and not going in as physically as we used to. It used to be a very traditional thing to have to go to the bank to hand cash in or get deposits, withdrawals, whatever it might be, or just ask someone for something. Now you have to talk to chatbots, which are pretty useless, to be honest. It's a long process to get hold of someone or talk to someone and get those immediate answers that you need. So it takes up a lot of time. So moving money around, including on weekends, can be a lot easier, especially for freelancers and things like that, for 24/7 access to money and the processing and the validation of that. More transparency, potential financial inclusion increasing as well. And the programmable money, which is still questionable, can help with the potential automation of payments. So your rent, your mortgage bills, etc. Albeit that we have direct debits, this can be more of an automated direct approach rather than having to set up things like standard orders and direct debits. It can also potentially allow smart contracts to be integrated here. Example, I'm not going to pay Amazon until I get my delivery. The delivery will be orchestrated in the fact that, say, Royal Mail, for example, say, I've just delivered this item, here's the evidence, goes onto the system, the payment transaction is done in that smart contracts aspect. Whereas at the moment, I would pay some money, it's gone out of my account, delivery could be delayed, this, that, and the other, all cancelled. I then have to wait 5 to 7 days potentially for my money to come back, even though I haven't even got the item. Causes a lot of problems, issues, and also just the general frustrations of being annoying. So that can also be eliminated in those aspects, and hence transactions per second in previous videos isn't just about a financial payment to payment, it's also a transfer of an action in any way possible, which is why blockchain is needed to help simultaneously act on all of these things. So what should we be watching out for is the privacy element, transactions being tracked outside of our regulation or our thought processes, reliability of the issuers. Of course, this is down to reserves. I think they're quite strong, but there's always a question mark. Even in the real cash world, we've seen multiple instances in the past where banks have closed or fallen down and people have lost their money, etc., albeit had some insurance behind it to cover that. Volatility aspects. Not all stablecoins, of course, are truly stable. You do need an element of trust in that system as well. These are still things being catered for. We're still in the early stages. Got to understand that. But looping back around to this topic about banks, we're coming back to Quant very shortly, guys, is looping around. How many UK banks, for example, this is probably a great story across the world as well. In the last 5 years, I believe, between the years of 2015 and 2024, we've had over 6,000 banks closed, and that includes building societies as well, things like nationwide bank stores, etc. It's around about 62% of the banking network in that time, which is absolutely phenomenal. In the 5 years between 2019 and 2024, there are, of course, a lot more closures more steadily in that time. And, of course, then the pandemic kicked it in even more of an overdrive. The trend towards 2030 is going to be anticipated to close even more. I mean, for example, I think Lloyds Bank are closing another 250 between now and the end of next year alone. Santander are doing similar as well. There are some new banks coming in, but if you look at their concept, they're not really physical branches. Some of them do have branches, but the likes of, I think Perena Bank are a new one, Ashman Bank, Stream Bank is another one as well. We've also got, of course, Revolut, who are coming now with new granted accesses of licenses coming in, I think, from last year. These are all digitalized options. They will have heavily integrated concepts as well with blockchain for sure, and cryptocurrency in general. And the Bank of London, which is a fairly new one in terms of the last 3 or 4 years. I think it's opening its like 6th clearing bank. or something, or it is the 6th one. So there's loads of things going on there, but all the traditional aspects are disappearing. So how is this kind of affecting us? Well, it's affecting the potential aspect of digital exclusion. Of course, many of the senior citizens that don't have the ability of internet and things like that, or low-income families, for example, rural communities struggling with apps or internet access and things like that. Look at the concept, guys. How many people are making money out of things like Starlink, etc., etc.? Loss of personal service. So again, losing that interaction of people, the service aspect, the customer service, the cash access, of course. ATMs are disappearing left, right, and centre. And of course, elementally, some business impact. A lot of traditional independent stores still utilise that aspect as well. And of course, security worries. Going digitally, do we have aspects of ID theft, digital theft, fraud, scams, etc.? Easily done now through emails and things like that, of course. But the numbers, this is staggering. I think it's around 3.7 million people in the UK as of a couple of years ago. It might have changed maybe slightly less than that today, but still a big number, are digitally excluded, i.e. they have no internet or very limited use. So this really does affect a big number, but it also has a forceful option towards it. Similar, I mentioned this in a video before, when I went to a very interesting event recently in the last few years of the digital pound foundations and things. They were mentioning, I think, around this number by in 2015, when they had the new agenda plans for the 2030, the Agenda 30 program from the World Economic Forum. There was a concept here to reduce or increase cashless payments by 300% by 2021. Pandemic kicked in. This increased 13,500%. I think it's a lot more than that. I think it definitely is a lot more now. And it basically forced a lot of people who said, I'll never use a bank card, I'll never use tap and go, I'll always use cash, to force them into this equation. It gets them used to the fact that actually it is probably easier to use contactless payments, irrespective of the concerns that we might have. It's just about habit and the resistance to change. That resistance to change can be changed quite quickly these days with media, with forceful opinions, and just generally our infrastructure around us being enabled or disabled to be able to use these things. A lot more stores these days don't accept cash because it is cheaper for them. It is easier for them. Instead of having cash bags sent to the banks back and forth and taking time to do that, personnel, security costs, now it can just be done digitally without even seeing a note in sight. So there are definitely, for sure, efforts in terms of efficiency and aspects of that. But there is also things where we potentially fall short, in the sense that a lot of these banks are closing with just 3 months notice, which I don't think is very acceptable. But it is encouraging this digital format. So when we loop back now to this concept of stablecoins and CBDCs and where Quant sticks in with this, there are so many articles now around stablecoins, and we've even seen David Icke's concepts of this in the 90s about a one world currency or a digital currency kicking in. There's concepts of prevention of CBDCs coming in. Now, at the moment, as of, I think, only the last couple of months, there's been kind of discussions that we will pause our CBDC program in the UK and revert to that discussion nearer 2030. That topic is still fluent and is still ongoing in the background. This has not disappeared, guys. Either stablecoins will take the responsibilities or certain aspects of CBDCs, and we're just getting infiltrated in that way, getting used to it, i.e. create a solution, create a problem, insert your solution. This is that concept. CBDCs will come back in some kind of format, or they'll be integrated in something we've already got, and they'll just drip feed aspects of that technology into the equation. That is 100% for sure. But that concept of utilizing CBDCs or even indeed stablecoins opens that question up to, well, what's Quant's responsibility here still, or what's its purpose? Because a lot of people are saying, will Quant disappear because of the CBDC information? Well, the answer is no, it's not going to disappear. Quant isn't just about CBDCs, guys. It's a core strength of interoperability, compliance, and definitely, as we've mentioned in many videos before, the enterprise grade aspect of blockchain infrastructure. So the Overledger, for example, the operating system behind that allows all the different blockchains, the different networks and systems, the interoperability, that's the wrong word, allows them to work interoperably, I think is the word I was looking for, whether they use CBDC, stablecoins, of course, the traditional payment rails that we've currently got, albeit going into this digital format. Now, the Bank of England, yes, okay, it's pausing it, but there's the digital pound aspect. There's the private institutions utilizing stablecoins. There are payment networks, for example, like the ones we already know worldwide, like Visa as an example, integrating crypto as settlement options. Banks needing to integrate for the digital asset and fiat capabilities, especially with the ISO compliance and the new RTGS system moving forward. So it's still required even without the CBDC because of its massive requirement on regulated digital infrastructure, and certainly the regulations that are coming in for the FCA and the Bank of England, very much so in very imminent times. So it has to be interoperable within financial systems that exist currently. It has to be able to work between private and public blockchain abilities, but it also has to work bank with bank, whether that be in the UK alone or with banks abroad. That is really important. So when we talk about the Quant token, we must bear in mind that the Quant price, yes, it could be deemed as quite expensive compared to a lot of other assets out there, of course, but we also need to understand its capability, what it's being used for. It's almost essentially a licensing issuance. So Quant tokens tend to be locked up in very long-term smart contracts, or even longer than maybe even 12 months. It's a license fee for those companies to buy Quant at those particular prices to allow them to facilitate, to create the frameworks, the production of those frameworks in finance, but also safeguard their future. It doesn't mean that they're not going to buy more Quant in the future for their needs or to build new platforms and structures. But if they want to be interoperable in all of these banks at a regulated level, at a very high level of finance, they will be using companies like Quant, and especially its Overledger systems and its operating systems, of course, as well. So essentially, enterprises buy this Quant token, they lock it up massively, and that also, of course, reduces the circulating supply. We must remember, in the aspect of Quant, there are many kind of like variable aspects to that as to why it's not kind of really going to be a relatively stable asset within the markets. But yes, they lock it up. There's high demand for the interoperability, which Quant definitely supplies as a project and a technology, and it's fixed supply. So this means the price pressure is more upwards than it is downwards. And of course, as well, why it's so high is the scarcity aspect. And of course, now, especially in my opinion, from this year onwards, yes, we've seen previous all-time highs. We'll look at the charts in a minute, but you'll see the scarcity going more so in this fact that the government and the enterprise level adoption is increasing over these years to come. So if you can imagine the RTGS systems and the ISO compliance going live over the last couple of years, and then this year more so for the RTGS, if you can imagine the next 5 years in the financial world really fully adopting blockchain and AI, and then the concept beyond that, where cash potentially almost completely diminishes, you then add the likes of the capabilities and the option requirements for the likes of stablecoins and CBDCs, our bank closures, our increase in requirement of adapting to a digital financial world. Quant will continue to be a progressive project in this sphere, and the Quant token, I can't obviously speculate too much on its price in the future. Some would argue over 1,000, 10,000, whatever. It doesn't really matter to the enterprise world and the governmental level how much Quant is per token, guys. Let's be real. We only get fussed about it as a general public because we have to fork out more money to try and get involved, or at least hold some of this valuable token. That's why we get agitated about and ask these questions, as well as just the general questions of what's going on with Quant. But reality is, when you're talking about these high levels, where even if you're a startup business, you'll have good angel investment funding to be able to go, right, we want to integrate with banks, we want to be at this high level. They'll promote Quant. They will, if a company goes to these banks and says, oh, we want to create this service, this, that, and the other, who do we need to go to create this? You go to Quant, because They are our partner. They have these abilities and they deal with this technological advancement. The banks are not capable of this kind of level. Maybe JP Morgan and a couple of others potentially, but they're not as such banks. They're very much huge, gigantic financial firms on top of banks, if you like. They do have teams, of course, involved in crypto assets or building their own stablecoins, but ultimately they still need a facilitator to work with other banks worldwide and the facilitating frameworks and platforms to do so, to which Quant is much more than capable of doing than most banks, if not all banks. So the licensing aspect requirement is there. The limited supply, I think it's like 14.6, is it max supply? Double check that. But certainly a lot of it is locked or held long term for that aspect. There's no inflation to an extent, because unlike many tokens, of course, there's no staking rule or dilution, albeit I think someone mentioned staking quite recently. We'll have to look into that in a bit more detail. But the inflation mechanics, I don't believe are there either. So it's definitely still required regardless of the UK CBDC, because there are a multitude of global CBDCs still live and kicking, definitely going ahead. But the aspect of this is that the dropping of CBDC in the UK just fully strongly demands the aspect of stablecoins, which Quant is still involved with, of course. The stablecoin regulation, Quant still help facilitate that regulation use. And the token demand will always be there because of its core access keys, its key demand requirements for the Quant token. And Quant is definitely positioned to support both paths of CBDC and stablecoins anyway. Just to very quickly run through the aspects of CBDC's next steps. We know China have launched the pilot. We know India's pilot is live. And we know Brazil is in test phase. We know Nigeria is live. Sweden's e-Corona, I think it's called. Double check that. I think that's in pilot stage. And EU in general is in design phase. So just because the UK is pausing its situation now, honestly, I don't think they've got the right people up there to facilitate this. They did in the previous government, because Sunak came in to bring in stablecoins, CBDCs, cryptocurrency. He's done that job. It's not really progressed massively since that party disappeared. There's lots of other different agendas going on right now, but I think they're putting other things in place before this one goes in, because they're probably putting laws and policies in that will affect our utilization of stablecoins and CBDCs in their own right. So we've just got to keep an eye on that. But this will all change, the likes of Swift, Visa, MasterCard, everything that we've known of payment systems significantly. And that is why Quant will be a significant player continuously in either of these topics. It is not going anywhere. And if anything, it will continue to rise over the next 5-10 years. My personal opinion and my own personal thoughts based on my portfolio, Quant is a long-term hold for me. I'm not interested in these fluctuations of, well, other than buying at the lower prices, of course, when it does go to like $70 or $40 as it did last year or the year before. But at these current stages, I'm not interested in buying at 70 or 100 and selling at 500. I'm in for the long game. I think it will be higher. Don't know where that high will be, but at least hopefully double of what it is currently on beyond that 500 mark as such, because I think that's where the market of these financial systems and these requirements are going. I do apologize that this video is quite long, but I think it's very important for those that are new, of course, that can facilitate the ability to understand this a bit more, and essentially equate themselves as to why this is still an important token to move forward with and potentially hold in your portfolio, albeit that's not financial advice, of course. But let's jump into the chart really quickly of the Quant token and see where we are with it currently today and where we see it potentially moving to in the coming months, or even not necessarily years, because I think that's very difficult to obtain. But I'm just going to pull across this previous fib level that we drew, not moving it too much, and zoom in slightly so we can just see where it's been retaliating quite recently. You see it's a nice upward trend at the moment. It's building nicely. It's consolidating nicely as well within 2 or 3 benchmarks of the fib levels. So I can anticipate some sideways movements in this particular area between 100 and say maybe 115 over the coming weeks before that next leg up with the market overall. But there's two things, variable things here. There's the retail market and there's the institutional market. The institutional market will, of course, maybe hold Quant for its value, like we do as retailers. But you've also then got the enterprise level that are buying Quant for its actual utility. So there are three key players, which is why I'm not fussed really about this year, to be honest, with Quant, unless you bought Quant at $44 and your representation, whatever your targets are, that's down to you. It's not financial advice from my side at all. But the concept in my head is in the next 5-10 years with Quant, hopefully we still have availability to it. If not, what we've already got in our portfolios, that this could be very significant because that adoption is there, the requirement is there. Things like CBDCs and stablecoins have really taken off over these coming years, as have countries' requirements for these to work interoperably. I think I got that word right this time. May not even be the word, can't remember. But that's where I see the focal point of Quant, why it's such an exciting project. Some would say, oh, is it good to buy now? Well, that just depends really where you think you want to get to it, where your targets are for selling, of course. Or if you have been purchasing it before and you're asking, well, that again is down to you, because you also need to define, like, what am I happy with as a structural price point to be purchasing at? And therefore, what is my target? Or what at least are the residual sell points along the way to take profits if that's your game? As I said, my personal game is not personally fussed about these movements between 100, 200 pound. In dollars, of course, that's a bit more. These are in dollars, these prices that we see on the chart, of course. But I'm not fussed about this fluctuation story between $100 and $200. I'm more interested in when it gets towards back in the all-time high areas of maybe $400 and beyond that. Where could it get to? If you look at the long-term fib levels, my anticipation in previous videos that was in this market, we potentially get to 700. It may possibly be too early depending on the CBDC stablecoin concept and thought process. We're still well off that, but it doesn't take too much for those narratives to kick in. And I think we just need some other variables in the macro environment, things like interest rates, the inflation rates to come down, for people to have more disposable income, more confidence in where their money is coming in, i.e. into markets like this. Potential ETFs may come in for Quant, who knows? This could really rally up to even further numbers, not necessarily maybe in this market, but by 2030, I'd be really disappointed if this wasn't at least 1,000 and beyond that. Just look at the infrastructure of like Ethereum, for example, way back in the day, of its lower prices. It's a similar mechanism. Ethereum is not only used as an investment tool, but it's used as a platform to build on. Pretty much all assets are using Ethereum as a platform for its gas fees and things like that. So you think of that kind of concept, but then apply that to the market that it's already in, i.e. the financial industry, and how much that's worth, not just in a local environment, but a global environment. The numbers could be quite staggering. So, albeit I haven't given you kind of like price predictions as such, but I've given you at least some thoughts as to my thoughts and opinions around Quant as a project still today. A project for the future by far is going to be a project for the future still. I'm very excited about it. The right people are there for sure and are very heavily involved. So let us know your thoughts and comments in the section below. If you're holding Quant still, if you're looking to add it to there, if you've got any further questions you want me to cover, please let me know and I'll get to those as soon as possible. But hopefully this has been informative, giving you a bit more residual value and information as to why Quant is a powerful tool moving forward, and ultimately, not financial advice, a asset really to look forward to holding in your portfolio, or at least not to perhaps keep an eye on. Thoughts and opinions, guys. Thanks very much for watching. We'll see you in the next one. Take care. Bye-bye.